Moving on for our next session. Joining us will be Oluseye Farodoye from the head of Telco Industry Strategy and Platforms at Google Cloud. He'll be talking to us about embedded finance, enabling ecosystems to drive financial growth and inclusion.
Thank you.
Hey, welcome.
How are you?
Yes, see you.
Hi everyone. Today we're going through the trends that we're starting to see within the financial sector, banking, fintechs overall, and the need for adopting an approach of embedding financial services and financial products within the value chain and the journey of the customers within the ecosystem. So overall, I'll take you through three major things that we're talking about today. Will be try to define what embedded finance is and look at the concept of API monetization. And then we'll kind of go through what financial brands need to do in order to have a successful go-to-market strategy. And eventually, and overall, we'll kind of try to go overall and see how the C-level and leadership within the financial industry and the banks as a whole need to mobilize themselves for the era of embedded finance. So what is embedded finance? In a nutshell, it is just finding ways to seamlessly integrate your services and your products within the offerings of any other service to all the customers that you have and you serve within your ecosystem. So it is not about trying to deliver digital products and digital services within your own digital surface. It's about trying to ensure that you meet the customers where they find themselves and where they do their daily activities. So it's really, really about trying to embed your services within a very large and diverse digital ecosystem. As you can see here with this diagram, you've got financial institutions and you've got the user at the far left of the diagram. And what embedded finance tries to do is to ensure that at any single point within the customer journey, you can find financial services that are relevant to your journey at that point in time. For example, a rideshare driver being paid and insured directly through the platform app itself. So what are we seeing in the industry as a whole? The trend is customers and users spend a lot of their time within other digital platforms and digital surfaces. So they'll be on Instagram, they'll be on Facebook, just be anywhere else, not necessarily on the app or the website or the financial brand. As you can see, for a US bank, the average customer spends about 300 times of visits of their time on the mobile bank. They spent 10 times going to the branch and 3,000 there on a separate digital ecosystem. So that's a lot of eyeballs. That's a lot of digital service that you're not covering if, for example, you do not find ways to meet the banks or meet the customers at that particular digital surface. This is the challenge that embedded finance tries to address by ensuring that with the use of APIs and the use of a diverse digital strategy, you can meet your customers at the point of their journeys. Is embedded finance old or new? It really isn't new. Banks have been doing this for a long time, and the opportunity is expected to grow over the next couple of years. In fact, it's expected to grow and generate about 230 billion of revenue by the year 2025. And it cuts across every single sector within the financial industry. So you can see wealth management, customer lending, insurance, payments. So it is a huge opportunity for financial brands and banks to capture a good portion of the market by ensuring that they can meet the customers where they are. In the pre-digital era, banks generally embedded themselves at several aspects of the customer journey. So you had branches near where people had to do deposits. You had branches close to certain businesses. You had branches set in certain towns. You had branches close to retailers. So banks have always participated or practiced the embedded finance approach by creating branches across different sectors of different parts of the economy. What banks are starting to do now, or what we are advocating for, is for banks to move away from physical branches, which they're already starting to do, and to ensure that with the same approach, ensure that financial services and financial products are available at every single point of a customer journey. So you can have a financial service or financial product used for international trade. You can have it ready to be used for someone who's planning to do a vacation within a travel website. And you can also have it when someone is trying to buy a home. So in a nutshell, the bank of tomorrow must serve the customer of tomorrow. You must provide omni-channel experiences, proactive support, real-time, embedded banking, both for your backend and your front-end systems. Ensuring that your digital backend systems are resilient and available to support the high impact, high throughput transactions of trying to deliver your services and provide them to customers within their entire digital touchpoints. And this leads us to API monetization. How did financial brands monetize branches in a pre-digital era? Branches were established and set up for new customer acquisition, to be able to target new market positions, create and ensure new transaction volumes, and in some cases, direct monetization for some services within the branches. This is how banks have done monetization in the past. They're doing the same thing now with API monetization, exactly the same approach, the same objective, same outcomes. Use your APIs to acquire new customers, to enter into new markets by being able to embed into new market positions, creating new transactions for customers and for other businesses and partners within your ecosystem. And in many cases, we're starting to see banks and financial brands monetize some of their API products directly to developers and to partners within the ecosystem as a whole. So how can you have a successful go-to-market strategy for entering into the world of embedded finance? First, you need to embrace a new digital brand and personality. We'll take you through this shortly. You have a new era of customers now, which are the developers. Treating developers as customers is key to being successful in the API economy. And then looking at targeting micro segments. Rather than having large macro segments within your business development objectives, you're starting to see micro segments emerge in the world of APIs. And then you need to set enterprise level goals to track and measure your progress and your performance as a whole. How do you embrace a new brand identity or the brand personality? It is exactly what we said earlier, what I said earlier about ensuring that you're not focused solely on your app or your website or your portal. You are looking at an outside-in approach, understanding what customers within your ecosystem want to do, and ensuring that you're able to meet them at that point. So before, a typical statement from a bank will be, our brand is supported by our best experience, we're a single supplier, we want to offer the best app within the industry. So banks have invested a lot of money, a lot of resources in ensuring that they've got a robust digital app or website to offer the services to their customers. But that's not enough. To ensure that you grow and scale out and meet customers where they are, you need to change your brand and personality to meet the customers at their preferred digital interface. And this is extremely important in the world of embedded finance, because changing your personality means you change the way you look at innovation, you're outsourcing some of your innovation to the overall community, and you're supporting a broader ecosystem of developers. So overall, the value chain for delivering digital services would need to radically change from being one-sided to ensuring that you're supporting the overall value chain from the back end all the way to the customer. And you can see here in the middle, you've got a developer who may not be a developer that works within your organization. You've got an API backend team ensuring that you're supported, the developers are supported, and then you've got apps that do not necessarily belong to the financial brand. Treating developers as customers is extremely important as well. As you can see, the developer becomes the kingmaker. They're the ones building the apps that the customers will use eventually, and they're the ones ultimately using and testing your APIs to make sure that they're able to deliver the experiences that you desire. So you need to onboard them as fast as possible. You need to ensure that their journey visiting your portal, you need to ensure that their experience by using your APIs is as seamless as possible. This allows them to build the apps and experiences that customers at the end of this value chain would use. And then eventually, if the customers enjoy the experience and they're able to reach your financial brand or financial services at the end, the developer is incentivized to use more of your APIs. So generally, the marketing mix for developers looks at a broad range of domains, from products to the place, to the price, the promotion of the APIs, the people, the process, and the physical environment. So all this is changing from being a physical setup like a branch to a digital interface or surface like a website or a developer portal. So your APIs become your physical evidence of capability. The pricing needs to be supporting the ecosystem as a whole, and the customer's preferred digital interface becomes the place where you do business rather than a branch, and rather than your own physical app or your own physical website. And usually, how do you start and ensure that you have the right API in place? It is an extremely difficult task to know what APIs developers you want. Extremely difficult to understand which APIs you're going to launch first. So working with your development teams and working with your product teams to identify table stakes and put a stake in the ground and say, this is the APIs we're going to try first. It usually requires a lot of experimentation. But once you get that done, you launch that API, and then you send it out to the market. And then the data that you get from the usage from the APIs and the developers allows you to get more information on building new API products and expanding your API portfolio. So this is exactly what happens when you have a set of table stakes APIs. The data points that you usually get are the value of the segments that have been reached. So right now, you know what segments are of importance to the APIs and to the community as a whole. You understand the kind of volumes that you're getting from the API traffic, and you start to see new market positions. This allows you to prioritize investment into those APIs and gives you enough information to be able to decide which APIs you want to build next and which APIs you want to either deprecate or retire as a whole. And overall, this allows you to integrate into a wider strategy, adding new API endpoints, adding new products to your portfolio, and ensuring that you start to grow your API domain as a whole. Earlier, I talked about microsegments. Usually, when you start to work within the domain of API marketplaces and ecosystems, microsegments starts to emerge within your ecosystem. Rather than having large macro segments, your API products and developer programs become these reusable entities that you can have within a very large domain of microsegments within your platform economy. And first of all, to identify microsegments, you first of all identify domains. There are several domains that customers reach out to or perform experiments or continue and start or end a certain particular journey. So in this case, we'll take, for example, let's say the home domain. So within the home domain, there are probably, let's say, 5 different customer stages within the home domain: renting, buying or selling, living, upgrading, and aging. Within these 5 domains, a couple of micro segments starts to emerge. You have letting agents, you have utilities and renting, you've got utilities and security and insurance and living, and in some cases, you've got home care assistance, healthcare, and delivery within aging. This is a diverse micro segment within the home domain ecosystem. And you can see, just by looking at this, you can start to imagine the kind of products and the kind of services that you might want to offer within these 5 domains, and we're targeting this specific micro segments. So if you take energy efficiency as an example, you start to see interiors, trades, home care assistance, and healthcare as segments that start to emerge within just the home domain ecosystem as a whole. You've still got utilities, insurers, landlords, estate agents. If you take energy efficiency, you can start to imagine the sort of APIs that could emerge within interiors, your trading, home care assistance, and healthcare. And this really starts to multiply the kind of journeys that you're looking at. Eventually, you can typically multiply your journey by 10 by supporting a diverse range of third-party apps compared to having just one set of journeys within your own proprietary ecosystem, your app or your website. Doing a quick search for home energy efficiency, you can start to see the sort of things that people search for: electric vehicles, tax rebate, do-it-yourself, DIY, insurance claim, interior designer. So the whole range of things or research that you could do just by performing a Google search for home energy efficiency loans. And you can start to see the sort of products you could build for the overall customer journey and the APIs that you need to develop to ensure that developers can build those apps within their own ecosystems. And it's a simple way, very easy way to double your impact as a whole. So for example, you take a loan API, you get sales conversions from your own proprietary apps, but you also get sales conversions from APIs and apps serving third-party customers built by third-party developers. Easy math, the unit economics are quite straightforward. Getting sales conversions from your own app and getting sales conversions from third-party apps really leads to doubling the business impact of your loan API. And what does this really do? It leads to several network effects. On one hand, you can get same-side network effects, which means customers who use the third-party app will attract more customers, making the developer happy to build more. It also leads to same-side network effects on the developer side. A developer who's happy with your API products will attract more developers to use those set of API products. On the other hand, it also leads to cross-side network effects, which means developers will attract new customers by building new engaging experiences. And because you've got new customers, more customers, those will attract more developers to use your APIs to build new digital experiences. So the effects are not just about the journey or about the impact on your business. You start to grow the ecosystem significantly without having to put too much effort. The main thing to do is to ensure that once you get your table stakes API in place, start to use the data to understand how developers use your APIs and start to grow your ecosystem significantly from there. And you need to set goals. Usually we've seen organizations that start API programs, try to do embedded finance, but don't set performance goals in place. It is important to understand the impact of APIs as a whole. The first speaker actually talked about this report that talked about the impact of APIs on your market cap. The research has shown that you can get 12% impact potential growth on your market capitalization by being an API-led organization. And overall, an MIT study has shown that you can get profit margins of up to 20% and revenue growth of 27 percentage points just by adopting an API-led business model within your organization. So we've seen that embedded finance is extremely important for financial brands, extremely important for banks to enable them to embed their services, their offers, their products within the customer journeys of partners and within the ecosystem. But how would you mobilize and ensure that you set up yourself for success within the world of embedded finance? So embedded finance is usually treated as a foreign market entry. It is a new domain for most organizations, and it needs to be funded as an internal corporate venture. How do you enter a new market? Usually, if you enter a new market, there are cultural differences between market A or country and country B. There are geographic differences, there are economic differences, in some cases, administrative differences. This is exactly the same thing that you see within the world of embedded finance. It is generally what we see within the world of API-led programs as a whole. You start to move from running your API program to support your internal use cases, to building an ecosystem to support external use cases and a diverse ecosystem of partners, you start to understand and see that this is really a shift from the way you used to do things before to support your own business to supporting the larger ecosystem of people across the ecosystem. So your culture needs to change. Innovation in the past will be about how do I build the best app in the market. Right now, innovation will be how do I build the best experience, usually via APIs, to ensure that third-party developers can build the best products for their customers. The economics also changes. So how do I ensure that the entire end-to-end experience, intellectual property stays within my brand? Now you're supporting IP and experiences outside of your own four walls. The governance changes from no business partners or very few business partners, or to business partners that are tied into long-running contracts and establishments, to orchestrating third parties for growth and monetization, and changing the mindset that all partners are valuable. And that's why if you look at the typical developer programs, you start to see the support for independent developers, small, medium businesses, to the very, very large brands. Segmentation also changes. In the past, you offer large market segments, usually based on macroeconomics, to micro segments, just like we saw earlier with the home loan situation, where you start to see micro segments emerge because of the customer journeys within a particular ecosystem. So generally, it is a culture shift, it's a mindset shift, and it's a shift in how funding needs to happen. Overall, going into the world of embedded finance requires a bit of entrepreneurial activity within the bank itself or within any corporate structure as a whole, ensuring that they're able to do that without necessarily impacting the business as we go along. So there's similarities within the strategies, which is customers in all divisions usually will want to keep within their domain. And there are also differences where you've got the APIs within divisions needing to be the same across the bank as a whole. So funding it as an internal corporate venture requires 5 steps as a whole: a seed step, a startup step, a stage where you launch your API product with the table stakes, you expand, and then you bridge by bringing that information back into your financial brand. So overall, in summary, to have a successful go-to-market strategy, you need to embrace a new digital brand. You need to treat your developers as customers, target micro segments, and set enterprise-level goals that are measurable, able to meet. And overall, to mobilize into the world of embedded finance, you need to treat mobilization as a foreign market entry and fund the mobilization as an internal corporate venture.
Thanks, Oluseye. So that was a great, insightful session. Just one question, actually. We have always heard, as in the APIs are more understood, though it's a technical stuff, it's more understood by the business side of the organization. They understand the value that you can bring out of it. But so there is always a resistance in terms of coming up with an API strategy, an API focused approach, or pivoting your organization in an API first way. So how do you see? So this is the next level, right? Only if an organization has adopted the API journey, has got into that journey, then only you can jump into that embedded finance journey. So how has been your experience? Where does the resistance come from in the organizations which are taking this path, or how smooth or how difficult it is?
I think overall we're seeing 2 things. We've seen organizations who are extremely able to sort of embrace the adoption of a culture of experimentation, because usually, because this is new, you've got your overall, you've got your product teams, and they're usually used to building products within themselves. So an inside-in approach, you build products, you send to the market, and see how they perform. In the world of APIs and embedded finance, you take a stable stakes without necessarily knowing how to perform, and then allowing the innovation to come from the outside in. So that's sort of the change we're seeing in the industry as a whole, across all markets, across all industries. So not necessarily in banking, and the friction the friction is usually internal, which is API programs sometimes start from the technology teams, and then when they expand, the business teams start to take over, and then usually see cases where the objectives don't align. But in the cases that we've seen that have been successful, whether it starts from technology or for business, once the business teams are able to understand the business value of APIs, they've seen rapid growth within those kind of organizations.
Yes. Okay. Great. Thanks a lot for joining us and sharing your
Thank you.
input. Yeah. Thanks a lot.